Hello, and welcome to Own Your Retirement. My name is Albert Lalonde from Kaizen Financial Inc. If you'd like more information about what you hear during our show today, give us a call at 586-752-7008 or visit us online at kaizenfinancialinc.com. That's Kaizen, Kaizen. And while on my website, click on the podcast page to check out our past shows and also to subscribe to our program on Apple Podcasts, Spotify, or Amazon Music. All right. As they are near retirement and their planning process goes into overdrive, many people forget to factor Medicare's surcharge, the income related monthly adjustment amount, or what we call IRMAA. Now, though IRMAA won't jump up and bite every retiree, the fact remains that if your income surges in a given year, you could feel basically a financial sting 2 years later. Now, during today's show, we're going to break down what IRMAA is, who it affects, and how you can address it with your financial strategy. But first, let me introduce my co-host, Tony Shore, who, from the way he's dressed, I assume it is heading to the beach right after the show. What's going on, Tony?
Yeah, you can't you can only see me from the waist up, but I'm wearing my Bermuda shorts ready to hit the beach.
I love it.
No. Albert, you are dressed up today. I know you
I
have
am.
a lot going on today as we're recording this show. But I've been really good. The show it'll have just been the 4th of July when the show
Yes.
airs. We're recording this the week of the 4th. And so that's fun. I mean, Independence Day. And it's funny because
Mhm.
I always think when I think about the 4th of July, the first two things that come to mind, it should be patriotism and the birth of our
Yes.
country, but really it's brats and burgers. I love 4th of July because it's the one holiday, Albert, where I can eat in one meal. I can eat both a burger and a brat, and nobody's going to think twice. Nobody's going to give me a hard time about it. It's the one day a year you can eat a burger and a brat. Nobody's going to notice. Nobody's going
I
to care
love
if you
it.
eat
I
one of each.
love
One
it.
of each. But seriously, after that, after our country, the birth of our country, patriotism, burgers, brats, I think of financial independence. It always makes me think Independence Day, financial independence. And
Yeah.
that's what you help your clients achieve. That's why you always talk about how important it is to plan, to
Yes.
avoid these costly mistakes,
Mhm.
to keep more of your money in your pocket for later in life so you can have financial independence once those work paychecks stop. And I think today's episode continues that
Yes.
because it's something a lot of people don't understand is IRMAA. I don't know if you've heard of IRMAA, but the first time somebody said IRMAA, I thought, Aunt Irma? It just sounds like the name of an aunt. And we have Uncle Sam and Aunt Irma. And
Yes.
here's the problem with Uncle Sam and Aunt Irma. I don't think they're, first of all, they're not my real aunt and uncle.
No.
Second of all, they always want more of my money. And
Yes.
so
Oh,
Irma will take your money, and hopefully by the end of the show, our listeners and viewers will have a good idea about how ways to avoid giving Aunt Irma your money. And she's the mean aunt. Everybody may have had, I love my aunts and uncles, but I did have that one aunt who was really strict
mhm.
and kind of hard on us kids, all the
Okay.
cousins. And
Right.
so that was kind of my Aunt Irma. That was kind of my situation.
Well, I think everyone can relate a little bit to your aunt out there in their, growing up childhood and even
Sure.
today. But let's focus on today a conversation around a Kiplinger article titled Nine Things You Must Know About Medicare's Income Related Monthly Adjustment Amount, IRMAA surcharges. So it's pretty eye-opening. So let's talk about IRMAA. And here's the deal. If your income crosses a certain threshold, you'll pay more for your Medicare, not as a penalty, but as a surcharge. That's the basics of it. But here's the kicker. It's based on your tax return from 2 years ago, Tony. So in 2025, they're looking at what you made in 2023, not necessarily what you're making now. And that's where it can get tricky. Now, Even if your income spiked for just 1 year because maybe, let's say, you sold a business, cashed out some stock, or maybe had a big required distribution, you could find yourself paying much more in premiums. And yes, that applies whether you're on traditional Medicare or Medicare Advantage plans.
Hmm.
Now, this isn't just a policy debate for, let's say, wonks in Washington. In fact, it's already happening and it's affecting real people. So, coming up, we'll tackle some of the most common IRMAA questions we hear. When does it kick in? Can it be waived? And how do you plan ahead so one good year doesn't throw off your retirement cash flow? Because here's the truth. Income planning in retirement isn't just about how much you make. It's about what shows up on paper and when, and what you have to give to Uncle Sam or Aunt Irma.
I like it. So I bet the first question is who has to pay this extra amount, this IRMAA surcharge?
Yeah. Well, let's break it down first on how Irma actually gets triggered because it's not random and it's definitely not something you want sneaking up on you. Here's how it works. Medicare looks at your modified adjusted gross income, which is your regular AGI plus any tax exempt interest from 2 years ago. So let's say in 2025, they're checking your 2023 tax return. So let's say if you're married filing jointly and your income was over $212,000, or if you filed solo and made over $106,000, IRMA will then come knocking. And it doesn't knock politely. It shows up with higher monthly premiums. In fact, the surcharge ramps up in 4 income tiers, and at a top level, you're paying $628.90 a month for Part B. That's outpatient care, plus
Hmm.
another $85.80 extra for Part D, the prescriptions. And just
Wow.
so we're clear, if you're a couple, you both pay it. That's not household pricing. That is per person, Tony.
Ooh.
Yes. And this is why income planning in retirement isn't just about how much you have, it's about when and how it shows up on paper. Now, a big Roth conversion, or let's say an asset sale in a single year, you could trigger IRMA even if your income drops in the next year.
Yeah. So you might want to do those Roth conversions before you retire.
Yes.
Well, taxes are low. Well, you're still earning a paycheck. You might want to do that depending on your situation. And I'm glad you brought that up. We're going to talk about other solutions to
Mhm.
overcome this IRMA problem. I know you have solutions that you use to help your clients. And it's interesting. I mean, $628, basically $629 a
Yeah.
month for
Yeah.
Part B versus, and that's the standard premium is 185, and it
Yes.
can go all the way to 630 basically per
Mhm.
person. So from 185 to almost 630, that's a huge difference. But IRMA this is relatively new, right? This is a recent addition to the Medicare program, isn't it?
IRMA?
Yeah.
Well, let's talk. It's been around for a little bit here. It's not. I wouldn't say it's fairly new, but what people have to realize, like you were saying earlier, with Roth conversion and everything, people didn't understand this or
Right.
aren't told about this. And a lot of people did Roth conversions, let's say at up to 63, 64, and then they stop thinking, okay, now we're getting to 65 to get Medicare, and then they don't realize that they look back 2 years from that.
Right.
And so when we talk about Medicare surcharges, actually where they come from, because they didn't just fall out of the sky. The
Right.
Part B surcharges was introduced by Medicare Modernization Act of 2003. So that's 22 years it's been around,
Oh, wow. Okay.
which is the same law that gave us Part D prescription coverage that all went into effect in 2007 then, see?
Hmm.
So then a few years later, the Affordable Care Act added a high income surcharge to the Part D, which then started showing up in 2011. Now, here's where it gets a little tricky. Your Part B and Part D surcharges don't work the same way. In fact, for Part B, the IRMA amount is tacked right on top of your standard premium. And for 2025, that standard amount, as you said earlier, is $185 a month. Now, you pay it all directly to the government. But for Part D, things work a little bit differently. The base premium depends on the plan you choose, and the 2025 average is about $46.50 a month. And you pay that to your insurance company. But if IRMAA applies, that extra surcharge goes, guess where? Straight to Uncle Sam, not your insurer. And if you're actually paying two separate bills for your drug coverage, one to the plan, one to the government. So the bottom line is that if your income's above the threshold, you're going to feel it in both your Part B and your Part D premiums, and they hit your wallet in different ways.
Yeah, and that's interesting. Again, IRMA and its potential ramifications here. It's certainly something worth checking in with a financial services professional about. Someone like yourself, a trusted financial professional who can make sure dealing with IRMA is in the plan, so you don't end up paying that extra surcharge, which a lot of people end up doing. So are IRMA's income caps adjusted for inflation?
Uh-huh. That's a great question. Originally, IRMA thresholds were adjusted yearly for inflation, Tony, but from 2011 to 2019, the ACA froze them, meaning more people got hit with surcharges, even if their income didn't really grow. Then the Bipartisan Budget Act of 2018 added a fifth top tier bracket for high earners. And then they froze that until at least 2028. So most brackets now adjust with inflation based on the consumer price index, the CPI. But that top tier stays locked. That's why smart income planning in retirement is so critical, because it's not just what you make, it's how it shows up on paper for you.
Yeah. Yeah, and that's a big deal too. Everybody's situation is different, so some aren't going to have to worry about this. A lot of folks might. You're going to have a
Yes.
lot more taxes than you think in retirement. Typically, people don't understand that. So, is there anything else before we take a break and move on here?
Folks, I would just say this. You guys, if you want to learn more about this, learn more about IRMA, your income, the income limit, and what you should be doing, visit my website at kaizenfinancialinc.com. That's Kaizen, Kaizen, or call my office, 586-752-7008, and discuss how we can answer your questions and address your concerns about IRMA, your financial strategy, and any parts of your retirement plan.
All right. Yeah, I encourage our listeners to give you a call because you want a plan in place. You want one that's going to address taxes in retirement, things
Mhm.
like IRMA, make sure your healthcare costs are going to be covered. And you've been talking about this Medicare surcharge called IRMAA, IRMAA. And you talked about who pays the extra money, how long IRMA's been around, and whether those income caps are adjusted for inflation. What do you have next?
Well, let's stay with that same Clippinger article titled Nine Things You Must Know About Medicare's IRMA Surcharges. Here's something that up a lot of people about Medicare surcharges. It's not based on what you earned right now. And that's the biggest part. It's actually, like I said earlier, based on your income from 2 years ago, because that's the most recent info the IRS has when Medicare sets premiums each fall. So for your 2025 premiums, they looked at what you reported on your 2023 tax return. And if your income jumps in 2024, well, you could expect to feel that hit in 2026. That's why timing matters, Tony.
Yeah. Well, sure, and a lot of it always comes down to timing, doesn't it, Albert? I
Mhm.
mean,
Always.
that's key. So, the next logical question would be, what happens if my income goes down? Let's say I hit a certain level of taxable income at one point in retirement
Mhm.
because I'm taking RMDs or I'm taking money out of traditional IRAs or 401ks,
Yeah.
and that's all taxable. But let's say then I start drawing from somewhere else, or I've drawn those down, and my taxable income goes down. Am I still going to have to pay more for my Medicare premiums?
Well, here's what you have to understand. If you're getting hit with an IRMAA surcharge, let's say this year, but your income has dropped since 2023, then you might not have to just accept it. In fact, you've had a qualifying life change, let's say like retirement, divorce, or even a death of a spouse. You may be eligible for a waiver, but here's the key. You have to ask for it. They're not going to just give it to you automatically. Okay. It's not like something they check on. And the list of qualifications is pretty specific. But
Hmm.
if your situation fits it, Tony, that waiver can save you some real money.
That's good. So, in addition to working with someone like yourself, how can our listeners go about getting that waiver?
Well, let's say if you think you're paying too much for Medicare premium because of a one time, let's say, income spike, here's some good news. You can absolutely do something about it. You can actually request what's called a new determination by filing Form SSA 44 with Social Security. Again, that's SSA 44 form. That's the form that says, hey, my income's changed. Let's recalculate.
Yeah.
Now, if you had, let's say, a life changing event like retirement, just include proof. A letter from your former employer with your retirement date works great, for example. You'll also want to provide an estimate of your lower income for the year. And here's a tip. Even if your tax return doesn't reflect that lower income yet, it eventually will, usually by the third year. This isn't just a short term fix, it can actually lead to a long term savings. So, don't wait for the government to catch up because you've got to raise your hand and ask for it. But if you qualify, hey, let me tell you, it's well worth it.
Okay, so that addresses if you have a spike and then go back to normal, what you can do about it. But what's the timeline for the surcharges? Are they permanent?
Yeah, and you know what? Here's the good news about those pesky Medicare surcharges. They're not forever. Unlike late enrollment penalties that stick with you for life, IRMAA is recalculated every year. That means if your income drops, your premiums can too.
Ah,
Let's say you had a big income year in 2023. So you're hit with the surcharge in 2025. But if your income comes back down in 2024, you'll see that surcharge disappear in 2026. So, yes, IRMAA can be unpleasant, but it's not permanent. Your financial strategy today can directly lower your costs tomorrow.
hmm. Yeah, well, and I was going to ask this question. I think I know the answer to it anyway. I'm going to ask it anyway. Does the higher premium, I mean, if somebody's paying that max premium of over $600 a
Hmm.
month per person for Medicare, does that mean you get any more coverage?
What do you think that answer really is, Tony?
Yeah, I'm going to push all my chips forward onto the no on
Yes,
that one.
you'd be totally correct. Winner, winner, chicken dinner.
Yep.
Let's clear up a common misconception. If you're paying more for Medicare because of IRMAA, you're not going to get more benefits. This
Mm.
isn't like car insurance where a higher premium gets you extra coverage. With IRMAA, that extra money is a surcharge, plain and simple. It's added on for higher income individuals and it helps fund Medicare for everyone else in the system. Now, it's true that Medicare Advantage plans can offer extras like dental, vision, or even gym membership. But here's the key. If a plan includes those perks, everyone in that plan gets the same deal no matter what they pay.
Yeah.
And if you're paying more due to income, well, you're helping cover broader costs, not buying more features. And that's why income strategies matter, not just to keep your own costs low, but man, to avoid paying more for that exact same coverage.
Yeah. Well, and let's get to the bottom line here. I mean, you've given us a lot of great information so far, Albert, but now tell us how you can help somebody, how you can help our listeners navigate IRMAA and Medicare in general.
Yeah, you know what? This is big. A financial service professional can play such a crucial role in helping clients navigate Medicare and, more specifically, understand and plan around IRMAA. Many retirees are surprised to learn that their Medicare premiums aren't fixed and can increase significantly based on their income from 2 years prior. And that's where a trusted advisor needs to come in. By analyzing a client's income sources, like let's say Social Security or required minimum distributions or what we call RMDs, annuities, your pensions, capital gains, or even Roth conversions. A financial service professional can forecast potential IRMAA surcharges before they hit. And then, more importantly, they can help develop maybe some more tax efficient income strategies to reduce or avoid those surcharges, potentially saving thousands in unnecessary premiums. Now, also, financial service professionals can walk clients through how Medicare works in general, like what's Part A, B, D, and Medicare Advantage plans cover. What do they cost? How to enroll at the right time to avoid penalties. They can also explain, well, how to appeal IRMAA surcharges following life changing events, like we said earlier, retirement, divorce, or even a loss of a spouse. So, in short, Tony, a financial service professional brings clarity to a system that often feels confusing and reactive. So, with proactive planning, clients can make smarter decisions, manage healthcare costs more effectively, and keep more of their income working toward the retirement they actually want.
Yeah, there you go. Well, I think that's the bottom line. And I think this has been a great discussion, kind of shedding some light on something a lot of people know not a lot about, if anything, and that's IRMAA, these
Mhm.
surcharges that can be placed on your Medicare premiums if you should have too much taxable income in retirement. And to avoid that, you just need a plan and you need to work with a trusted financial services professional, somebody like yourself, Albert. So great show today. But before we go, let our listeners know one last time how they can get a hold of you to set up that no charge, no obligation consultation.
Folks, if you want to learn more about your income planning, how to make sure that you can avoid IRMA, visit my website at kaizenfinancialinc.com. That's Kaizen, Kaizen. Call my office at 586-752-7008 and discuss how we can answer your questions, address your concerns about not only IRMA, your financial strategy, and all other parts of your retirement. Remember, it's our goal to help you prepare for the retirement you work so hard for so you can own your retirement.
All right. Thanks, Albert. And listeners and viewers, thanks for tuning in. That does it for today's episode of Own Your Retirement with our host, Albert Lalonde.
Take care, everyone.